Good morning, everyone, and welcome to the European crossover webinar. And it continues to remain a very slow August trading session. We are seeing the dollar on its highs and correspondingly the euro on its lows. You can see here with the cash dollar index pushing up against that 98.42. And you can see that was our bias chart resistance here. So right up here against this 42. When we did the daily analysis at the beginning of the week, we said it can get up to 55, but this is was our bias chart resistance leading in from yesterday into today. So probably still stay the same. I mean, right here is at 55, and we're pressing up right now up against these highs. What's going in? Obviously, the euro had moved above 111 and slipped right back down again here. We had our bias chart support actually down to 1053, so we could still slide some more as we get in towards the end of the week with Jackson Hole. Obviously, how Powell is conducive to further easing will potentially allow the dollar to go in and pair back. And the dollar may pair back anyway as we go into that to offset that potential risk. Other than that, the markets are very, very quiet. Look here. Now, peso has moved higher. We prepared back a bit, but everything is relatively quiet. We did get the Canadian dollar to push back. It's above its bias chart resistance, but that was yesterday. And we've seen the cable slide back to the key 2094 here. We'll go in and just take a quick look here. The bond had pulled back, but we're trying to assert ourselves again a little bit higher here. Came down and touched this key area. Actually, yesterday was at 77.84. We dipped below it, but we were able to fight back above it. 10-year yields have also slid back here. So really just a race, lower basically. S&Ps still hold up here at this area here. We're going to move into the quickly on the cross rates. Same thing here, relatively quiet, other than the sterling odd pairing back a bit from here, maybe more than a bit here, because we made it up to just about 79.50, and then we turn around and have slid back down the hole as starting has weakened across the board. Euro Aussie continues to remain weak here, obviously with the weakness in euro. And just bear with me, just trying to pull up some data for today. We do have CBI trends at 6 a.m. Eastern here for UK, and really just another quiet. We had producer prices earlier out of Germany, so just another quiet session here. Manufacturing sales out of Canada. And that's it for the 20th here. Let's move this out of the way. As I said, it's very, very quiet. We'll go on and move on through the news. The Australian dollar inched higher on Tuesday as investors paired wagers on another early cut in domestic interest rates, while increasing speculation on fiscal stimulus globally aiding risk appetite. They also got a boost after minutes on the RBA August policy meeting, suggested it was in no rush to ease again, saying it would wait for evidence to accumulate before considering a move. Markets had already been pushing out expectations for a rate cut, with September seen as a 12% chance and October as 68%. A couple of weeks ago, the October contract rate implied a greater than 100% probability. The key fadeaway is the RBA's current central forecast likely needs to change somewhat, or global down risks need to intensify. We suspect the September board meeting is probably a little early at this stage. NAB expects the next cut to cash rate to occur on November. Also arguing for a pause is the tide of stimulus globally, which would lessen the threat of a major downturn. The Washington Post reported senior White House officials were discussing the possibility of a temporary payroll tax cut in an effort to boost the U.S. economy. Federal Reserve is expected to cut by at least a quarter point in September, while the European Central Bank recently flagged an easing in German government is flirting with extra fiscal spending. The dollar near a three-week peak as global stimulus talks lifts yields. The dollar hovered near a three-week high on Tuesday as expectations policymakers around the world would unleash fresh stimulus drove an improvement in appetite for riskier assets. Yields on benchmark treasury yields pulled away from three-year lows, helped in part by the prospect of Germany ditching its balanced budget rule to boost spending. The dollar is higher across the board, tracking the rebound in yields. The prospect of Germany embarking on stimulus was a turning point, and the dollar was regained momentum since, said Yuki Ishizuki. The greenback has traded a little change at 106.58 yen against the Swiss franc, the currency sought in times of market turmoil and political tensions along with the yen. The dollar held near a two-week high of 98.20 francs. The political situation in Italy remains unstable. In addition, expectations of Germany embarking on fiscal stimulus may in turn also heighten the Italian fiscal concerns. Australian edged up to 67.76 after the minutes of the RBA meeting. We did already cover that. And particular attention will center on Fed's Jerome Powell's comments on monetary policy at a time when investors widely expect the Fed to cut rates again at its next meeting in September. A series of further rate cuts by the Fed has already been priced into the dollar, so the current currency could gain a fresh boost if Powell does not sound as dovish as expected. And the cloud rate cuts prospect. So let's just go on and quickly move into the bias chart. Like I said, relatively quiet. The bias chart support here on the euro will going to remain the same at 10.53. No changes there. On the upside, right there. Let's see, 11. Just move this right there to 11.29. Moving into the cable. Well, we're still hugging here now, 2094. And this is key here. We can dip just a hair bit lower, which would be take us down to 2080 right here. So let's move this down here. going to be 21. And onto the odd. Staying rather quiet here with the odd. We had 68.16. We'll keep that here. And the slide to 67.42. Same thing. No changes here with the odd. Like I said, it's quiet trading. 67.42. And 68.18 will stay the same. Let's get with Kiwi. Like I said, not much changes here because everything's very, very quiet with August trading. Most European traders out on holiday, and no data on Monday. Essentially, no data today either. So really, nothing to drive this market. 63.89, the key major level we discussed yesterday. You can see that here. So no changes here. Certainly in the Kiwi, and it's trading very quiet to start with. Difference has been with the dollar CAD. Now that we've seen some movement here, and we're pushing still a little bit higher here, potentially up to 33.53, and you can see that here on the daily. And we'll take a look at it on the 2-hour. All right, call it 33.38. There you go. $32.88. We'll keep pretty close. And on the dollar peso, well, you can see here we made it right up here to this 1988, and that's going to be our buy chart resistance here, 1988 here. One thing about August trading is so quiet. There's just not, we just don't see any movement. Should see things spark up towards the end of the week. And for resistance, for support, 1967. Be a pretty good little dip. 72 on a short haul basis. Hold on. Yeah, it's going to be right there. 1972.6. Dalian just kind of sitting rather quietly. It's going to be 1620 and 674. We go. And moving into the cash dollar index. There's that area, that 98.55. But what we've been working with lately has been right here at yesterday's bias chart resistance, which is right here, 98.42. So I'm going to go and keep this 98.42 here. Difference is we'll move the support to 98.02. And let's go and move into the cross rates. Yeah, with lack of data, we just don't have very much to move this market, or impetus to move this market. $67.85 and $68.65 was just pretty much smack dead in the middle. Yeah, that's no changes here. We are very, very quiet. Moving to the euro yen. We're dipping a little bit lower here. We can actually move just to right there. It's going to be 1781. Oh, just about there. There you go, 1778. $18.33. And on to the euro one. This could weaken even a little bit further here in light of the odd, the thought being pushing back the interest rate cut, not being the Not as likely for September, or not as much. They were pricing in 100% cut. Now it's reduced that quite a bit. So let's go with 62.95. You may see this a little bit under pressure further. Let's go with 63.98 on the upside. And this Kiwi, I mean, boy, this is just simply not even moving at all. This will remain the same. 72.50 with the upside. We'll drop that down to here. 73.17. And into the Aussie yen. Really, no changes here. My goodness, with everything so quiet, it is just not really a whole lot to um, go over here. Look at that. We're trading very tight range, so that remains the same. And moving on to the guppy. For now, we're going to keep this here. 28.70. Drop one big whopping pip. And on the upside, $29.32. I'll call it $29.33. And lastly, starting on. So by the quickest we've ever got through the webinar, there's just nothing moving at this time. Simply nothing moving. Definitely the potential to move down here, which is going to come in. There we go, right there. 77.73. And on the upside, 79.44. As you can see, it's just very, very quiet trading. Very quiet August trading. As I mentioned, probably the fastest we've ever gone through a webinar because there's simply nothing moving and we don't have any data. So we don't even have the catalyst to even move it. And everything's not moving. Many Europeans on holiday. Towards the end of the week, probably starting tomorrow, we'll start to see a little bit of a movement getting ahead of Friday. But thanks for joining us here on the European crossover.